Hello, and welcome to another episode of Get Your Fill Financial Independence and Long Life, where we explore ways to achieve those two goals. And we invite superstars of the industry on to help us. And that's why I'm so excited that Jay Connor is with us today. Jay is the private money authority. So if you thought that the only way to get money for your project was either to save it up and go to a bank or to go to a hard money lender who's going to take your firstborn or maybe even second, third born child, then you are going to really want to listen in and hear what Jay has to offer. Jay, thanks so much for being with us today.
Well, thank you, Christine. I appreciate the invitation, and I'm so excited to talk with you and your listeners about my favorite subject, and that's private money.
Any kind of money is my favorite subject. But
there you go.
Awesome. So, Jay, this is, what I was saying in the intro is kind of people's understanding of money. But how did you sort of discover private money? Was that something that you always knew about? Were you always in the real estate industry? Actually, that should be my first question.
Well, actually, I was born and raised in the mobile home industry or manufactured housing industry, and did that pretty much all my life up until 2003, when the financing for the product pretty much went away. And but I had known since the early 90s, if I ever got out of manufactured housing, that I wanted to get into flipping houses, single family houses. I've actually done some commercial developments as well. I've done a shopping center from the ground up. And so I've been all my life, I've been around the housing industry, helping people, own their own home. But again, as the financing went away in 2003, so I went full time into primarily investing in single family houses back in 2003.
Wow. And I want to say, I want to ask you this question because I hear from a lot of people, oh, there's no inventory, there's no opportunity. Now tell me, how many homes are there in your target market?
Well, our entire target market has only got 40,000 people, and we do 2 to 3 houses a month. And that's not a lot, 2 to 3 houses a month, but our average profit right now is $71,000 per deal.
So anybody who says to you, oh, I live in Boston, there's no place to find home. There's how many millions of houses in Boston? There's bound to be somebody, right, who's selling at a reasonable price. That shuts people up a little bit and gets them to think a little bit outside the box.
Exactly.
Because it sounds like since 2003, you've rehabbed or in some way touched about 1% of the homes in that area, right?
That's right. We've rehabbed a little bit more than 450 houses since we started. And so, yeah. Now, I must say, Christine, I've been to more than one seminar that I didn't plan on going to in this world of rehabbing. If you know what I mean, I use the word seminar very there. In other words, you're going to pay one way or the other. You're going to either pay by your mistakes, or you're going to pay somebody that has already been through the minefield and can hold your hand.
That is so true. I know. I've been in that same school of hard knocks myself more than once.
Exactly.
That's an expensive school.
For sure.
So how had you already been doing some rehabbing and flipping? I mean, it's not that easy to jump into flipping houses.
Yeah. I primarily, I had some wonderful relationships with general contractors and guys that had already been doing it for a long time. And so from 2003 until 2009, for 6 years, I relied on the local banks and mortgage companies to fund my deals. And so this world of private money, Christine, I just didn't wake up one morning and say, hey, I think I'll go get me some private money. No. It was like out of necessity. I had to go find a better way. But anyway, the first 6 years, I relied on the local banks and such to fund my deals. Well, Christine, I remember it like it was yesterday. I called up my banker on this very phone right here, and his name was Steve. we actually still have landlines in North Carolina. But, but anyway, I called up my banker and to tell him about two properties that I had under contract. And I had had this kind of a conversation with Steve, my banker, for, 6 years. And we had done a lot of deals together. But I called him up and I told him about the two deals I had, one in Newport, one in Beaufort. And I told him, when I wanted to close, it was, about 30 days down the road, and the funding that was going to be required. And so anyway, I told him about the deals, and then Steve went quiet on me on the other end of the line, which is never a good sign, right? No. So Steve finally cleared his throat and he says, well, Jay, I'm sorry to tell you, but you no longer have a line of credit here at the bank. And I said, what are you talking about, Steve? We've done a bunch of deals. We've had a great relationship, never been late on payments. I've still got a fantastic credit score. I did then, I still do now. And I said, what's going on? He says, well, we're just not loaning out money to real estate investors anymore these days. And so I hung up the phone. And of course, Christine, you and your listeners may recall what was going on in 2008 and 2009. It's like the spigot funding turned off overnight. So I found out I wasn't the Lone Ranger that this has happened to. So I sat here for a moment and I'm thinking, well, my first thought was, I sure wish I had known I didn't have a line of credit when I put earnest money down on those two properties. And back then I couldn't get earnest money back. So anyway, I sat here for a moment and I asked myself, I said, well, what am I going to do? Well, I developed a new mantra during that time, and that is, it's impossible for you to fail unless you choose to quit. And quitting was not an option. And so I called up my buddy, Jeff, who was a real estate investor. He lived in Greensboro, North Carolina at the time. I told Jeff what had happened, and he said, well, welcome to the club. My bank's cut my line of credit off last week. And so Jeff told me about this word or phrase I'd never heard of, private money. I'd never heard of it, didn't know what it was. So anyway, I did quite a bit of research. I learned all about it. And I put my own private money program that I would teach other people about. And so I put my program together, how am I going to protect them, the interest rate I'm going to pay, et cetera, et cetera, et cetera. And so within the first 90 days, Christine, I was able to raise $2,150,000 in private money from individuals, no kind of institutions, no kind of banks, no kind of hard money lending, et cetera. And, I tell people all the time, Christine, it's interesting. Since 2009, when I started borrowing a lot of private money, we've got 40 some private lenders now, about $8 million that we move from projects to projects to projects. And all this time, Christine, I've never asked anybody for money. And people all the time will say, Jay, how in the world do you have millions of dollars in private money from private lenders and you never ask for money? It's real simple. I put on my teacher cap, on my teacher hat, and I start teaching people what private money is, what self-directed IRAs are. I mean, that's a big one right there. Over half of our private lenders are using their retirement funds to earn unlimited money per year, either tax deferred or tax free, depending on the type of retirement fund they've got. So I teach them about self-directed IRAs. I teach them about private money. And then when I get through with teaching them about it, now they're chasing me. I'm not chasing them. And so it's like I'm not out there asking anybody for money. I've never pitched a deal. I teach them about private money. They tell me how much they got to work with. And then I go find a deal for them and me to do as soon as possible. And I call them up and I just give them good news. I say, I got great news for you. I can now put your money to work. I got a house in Newport. After repaired value is $200,000. Funding requires $150,000. You need to wire your funds by next Thursday. End of conversation. If I ask them if they want to do the deal, that's like the most stupid question I can ask them. It's like, of course they want to do the deal. Because you see, I never pitch or teach, rather, my private lending program and have a deal at the same time I need to get funded. Now I'm screaming like I'm desperate, right?
Right.
So we
Yeah.
just do the program and then we let them know when we've got a deal.
Yeah.
Sorry for the long answer.
No, it's perfect because there, I think it would be surprising for a lot of investors, or I should say, a lot of wannabe investors, how many people are just dying for a good place to invest their money.
Absolutely. Absolutely. I mean, right now at the local bank, national average on a 12-month certificate of deposit yield is only 0.17%. That's less than 1/4%. You come along and pay 7% or 8%, no points, no origination fees, just a straight 7 or 8%. And that's 32 times more, at least, than they can get at the local bank. I mean, it's like you just said, people do not know what to do with their money. And quite frankly, it's our moral and ethical obligation to relieve them of their problem.
It's such a burden you're lifting from them.
Yeah, it's like, along with this, I've never asked for money. What goes along with that is, and what gets rid of the fear of rejection is, I'm really out here serving these people, showing them a way where they can get a high rate of return safely and securely, because we never borrow unsecured funds. We collateralize their loan with the property that we're buying. And, with a 75% maximum loan to ratio on the after repaired value, I didn't say on the purchase price,
right,
on the after repaired value, then, once that house is rehabbed, they got a 25% equity cushion there. A lot of new real estate investors ask me, they'll say, well, Jay, who's going to loan me money? And I've never done a deal. The answer is, if you don't pay the private lender, the property does, because we're collateralizing it. And if you don't pay them, they get the property.
Yeah, definitely. So is that one of the ways? What are some of the ways that you allow what's the right word? That you teach the investor how you are protecting them? Because you said you're protecting them. How do you explain to them how you're protecting them?
Yeah, so I let them know that they're going to get the same protection as the local bank. So they're either going to get a mortgage, or like here in North Carolina, we're in a deed of trust state, right? So both of those documents accomplish the same thing. So in the event, and so that document gives the lender the same right as giving, like a local bank, the legal right to foreclose if you don't pay them. Now, of course, if something went awry, you don't want them to have to go through foreclosure. Just give them a deed in lieu of foreclosure. But I mean, if you know what you're doing as far as the math goes, and it's the math that makes the decision as to what your maximum offer should be on a property, then the way we've got the private money program structured, everybody's protected. Is there risk in everything you do? Absolutely. Does a rehab always cost more, or mostly always cost more than you planned on it? Yes.
All the time.
But again, as long as you know the math and know the formula as to what your maximum offer should be, then there's a lot of equity cushion to protect everybody involved, meaning yourself, the real estate investor, and your private lender.
And do you always do flips? Did you ever are any of your investors want to hold on to the property?
Yeah. So most of them in this market, we go ahead and sell, but I've also sold a lot of homes on a rent to own program where we actually help the tenant buyer, the rent to own buyer, we actually help them in credit repair and require them to get into credit repair and help them move on to cash out. So, those rent to own deals, I mean, we may have those for 12 months or 24 months, but as far as a buy and hold strategy, I do have some, but that's a smaller part of our portfolio. But, you raise a good question there, Christine, whether you want to buy and hold or you want to flip. In either case, the private money can be used for both.
Right. Because once you've added that value, you could talk to a traditional bank and refinance, and if that person wanted to cash out.
That's correct.
because you're in a much better situation. I don't think banks like short term, and they don't like, they're not that crazy about rehab either.
Right, exactly.
A little out of their comfort zone. So it seems to me now, when you're talking about the program that you have set up here, that this has been a very well thought out, very, you're covering all the bases, right? You've got your money, you're understanding how to do that whole private lending piece. You're understanding how to fix and flip properties, and you're also having the right structure with the credit repair and things like that, so that folks can buy a property that they maybe right now couldn't get approved for because of their credit issues or whatever. And that's very impressive. I mean, in a relatively, I mean, it's not like yesterday, but 2003, I guess it's kind of a long time, 18 years. Right. We're at a certain age. We're like, really? Wasn't that yesterday? But tell me how this all sort of evolved. I know a lot of people have probably like borrowed a little bit of money to fix and flip a couple of houses or whatever, but you decided at some point, I'm assuming, to turn it into more of an industry, right? More than just a little mom and pop kind of operation. Tell me about that process.
Yeah. So as far as our operation goes, I really have a small number of employees, but I got a lot of virtual assistants. I got people on 1099 as well. But as far as our operation goes, I've got a full-time office manager here in my office that keeps all the books and et cetera. And I have a full-time personal assistant. I have a full-time acquisitionist that talks to all of our off-market sellers and all of our rent-to-own buyers. So she does all that initial negotiation. And that's the entire W-2 team. But then on 1099, I got two different crew leaders that can do two houses simultaneously. And then and they're all 1099. And then I've got two general contractors that can also do four houses simultaneously. And of course, so all those people are 1099, the virtual assistants are 1099. So as far as the team goes and the operation, it's really not a large group of people. But I'm not sure that's the question that I was supposed to answer. So,
well, I was sort of saying, did you intend at the beginning to create this size organization with all these different aspects, or did it just sort of naturally evolve?
It just naturally evolved. Like my first year, my very first deal that I did, I didn't do one rehab flip at a time. I just wanted to just get my feet wet. So we did our first house from start to finish before I even looked for the second house. So in our first year, we only did 3 houses, right? Because I really wanted to make sure I had my feet underneath me as far as, understanding what's going on and et cetera. So then, it grew from there. In our portfolio right now, we've got about 22 houses. And, half of those are in the, rehabbing flip, stage, et cetera. Mm-hmm. But it just sort of naturally evolved, over the time period. And by the way, I want to make this point, Christine, while I'm thinking about it. And that is, private money is not only for flipping houses. Private money is not only for rehab houses. I mean, we in this business, we talk about the ugly house business and the pretty house business. And when we say the pretty house business, what a lot of people are talking about is buying a house on terms from an off-market seller, from a for sale by owner. And, I've bought a lot of houses subject to the existing note with creative terms and et cetera. But from my experience, only 13% of for sale by owners will sell to you creatively. Of course, there ain't going to be nothing creatively coming in the multiple listing service. I mean, you got to have the cash for that. But those other 87% of for sale by owners, they want what? They want all the cash. Yeah. And so I tell people all the time that private money, you're going to use it when the seller, regardless of who the seller is it listed in the multiple listing service? Is it a bank-owned property? Is it an off-market house that requires all the cash? When the seller requires all the cash, then that's when we use private money. So typically my exit strategy is, if I buy with private money using all cash, I want to cash out, because I don't want to leave a bunch of cash like buried typically, in a house.
Yeah.
And then secondly, if I buy on terms, then I'll typically sell on terms, which is like rent to own. Mm-hmm. So buy with cash, cash out. If you're buying creatively, buy on terms, sell on terms kind of thing.
Yeah. Okay, great. So you've said you've got about 22 projects going right now, or 20 projects going right now. What's the sort of a typical day like for you? How involved are you in the kind of day to day?
Yeah. So when we started out, it was like early in the morning till late at night. But I finally figured out after a few years went by, I said, wait a minute, Jay, you didn't get into this business to have it running you. You should be running it. And so I really started to automate the business. What's the definition of automation? It's like all the tasks are getting done either by technology or by another person on the team. And so we really started, it was in 2010, where we really started automating this business, getting the team in place and et cetera. I have virtual assistants that keep up with all the leads that we have coming in and et cetera. So my actual hands-on involvement in the business is less than 10 hours a week. Maybe some weeks 5. And so people will say, well, Jay, what do you do? What do you do? Well, I make decisions. So my job and responsibility, besides overseeing this operation and having, weekly reports come in to me and et cetera, first of all, I got to make sure the marketing machine is turned on, right? I've got a fantastic relationship I've got the same realtor working with me and me working with him since 2004. Same realtor since 2004. And so I'm not a realtor on purpose. I want people to do what they're best, and I'll do what I'm best. So my realtor is like a critical team member. His name is Chris. He, pulls all the CMAs, comparable market analysis, before I make offers. Any offer I'm making on a property goes through him. So that relationship is, very, very important. Yeah. But so what do I do with my time? I got to make sure the marketing machine is turned on. Chris lets me know anything that comes up in the multiple listing service that I might be interested in, any bank-owned properties that show up. And then, of course, we do a lot of direct marketing to off-market houses as well. And so I got to make sure the marketing machine is on, seller leads are coming in, and then on top of that, I got to make sure my team members have got what they need. And in addition to that, my acquisitionist, when we have a house negotiated, she sends me the information. Well, actually, we have a fantastic CRM, customer relationship management program, that keeps up with all of our deals, all of our prospects, all the sellers, et cetera. So I look at the deal and I analyze it, and then I decide on what's the maximum offer on that property. And then my acquisitionist negotiates it with the seller, or if it's in the multiple listing service, then I give that back to Chris, my realtor. So what do? I make decisions. I make sure the marketing is turned on and making sure my people have what they need. And I do quite a bit of traveling. Prior to COVID, I would do about 30 trips a year speaking on stages across the nation, teaching people about private money. But, when I'm in town, which is most of the time now, but when I'm in town and we have a house to go look at, I'll go with the team. When we go, that's Chris, the realtor, goes to verify what he believes to be the after repaired value. And one of my crew leaders or contractors will go with me, to work up the rehab budget sheet. And so I'll go look if I'm in town. Of course, if I'm not in town, the team goes without me and gives me their report. And then I don't go back. I do not go back to the house at all until it's completely finished, staged, and ready for photo pictures and videography and all that kind of stuff, because I want to get the wow effect. So, I have my realtor go through the house when the crew is finished, for him to have his own punch list and say, well, look, if I'm going to market this property, we still need to do this, do this. And in fact, he goes there throughout the entire project. He'll stop in every week or so just to see what's going on in the midst of a project. And I learned the hard way, Christine. Used to, I'd stop in all the time. And I learned over time, I need to let people do what they do best and get out of the way. Well, you can do that when you've got fantastic team members and you're working with the right people. But I learned the hard way. The more I stopped in and looked around, the more it cost me. Because I kept coming up with stuff, that I wanted to do. But we've had the same interior designer on our team since 2004. Her name is Beth, and she's involved in every rehab project from the beginning. She chooses all the colors. She chooses the roof color if we're doing a roof. She tells the contractors what to do. So that's another important part of the team.
Nice. So what do you think is your favorite part of this whole process?
My favorite part of using private money is I get multiple checks on every deal that I do. So, traditionally, when you're, in real estate and you're flipping houses or whatever, traditionally you don't get a check until you sell the property, or if you're renting it until you have it cash flowing, or if you're selling it on rent to own, you typically don't get a check until you get a non-refundable lease option deposit. The legal term is actually an option fee, but that's the traditional way of doing it. I get at least 2 checks on every transaction that I do. So the first check I get is when I buy. I always pick up a check when I buy. I never take any of my own money to the closing table. So they say, well, who in the world is going to loan you more than the purchase price? Private lenders, because they understand the program and they understand how they're protected. So let's say I've got an after repaired value of $200,000. Well, let's say it's a rehab house and I'm going to buy it for $100,000, which is very common to be buying at 30 to 40 to 50 cents of the after repaired value. Well, I'm not going to borrow more than 75% of the after repaired value. So 75% of 200,000 is 150,000. So I can borrow from the private lender or lenders 150,000, have that wired to my real estate attorney's office who's going to do the closing. Well, if I'm buying for 100,000 and I'm borrowing 150 when I buy it, I'm bringing home a $50,000 check, right? Less a little bit of closing cost. Well, I'm not going to bring home a $50,000 check unless there's going to be a major rehab involved. So, let's say the rehab is $30,000, right? $35,000. So I'll use 30 or 35 of the 50 for the rehab. Well, what's the rest of that $50,000 check? Well, there's carrying cost on every deal that you do. There's marketing cost on every deal that you do. And it's okay to go ahead and pull a little equity out if you want to for your business. I tell real estate investors and new real estate investors all the time, private money is the fastest way to your first real estate deal or your next real estate deal. Yep. Because, I tell you, Christine, I've heard other people say, oh, get the house under contract. The money will show up. Where? Yeah. Where's the money going to show up, right? Yeah. And so I want to have the money lined up. So then back to my example, the second check would be when I sell it for $200,000. Well, what's the difference between what I'm selling it for and what I owe the private lender? Well, we only do interest-only payments or accrue interest only. So I'll still owe the private lender $150,000 in this example. So the $50,000, I'll be able to keep most of that, like less, realtor fees, less commissions, and less any unpaid accrued interest. So, I may only keep, 40, 42 or whatever of that second $50,000 check. But if you add 42 to the 15,000 that I had left over, then that's an example of how I can make between $60,000 and $70,000 on a 200,000 after repaired value, house. So what's my favorite part? receiving multiple checks and never having to pull any of my own money out of my pocket.
That I could see how that would be your favorite part.
Well, and I tell you, I mean, talk about an influx of cash flow. I mean, my lands. I mean, that's pretty nice.
Absolutely. So tell me about how you help people today, about your when you're doing your coaching. You're actually coaching the private lenders, you're educating the private lenders, or you're teaching people how to get private lending?
Yeah, so both. So
Okay.
I educate new potential private lenders on my private lending program, what private lending is, and just to make sure everybody's clear, a private lender is simply a human being, an individual that loans money to us real estate investors, either from their investment capital or from their retirement account. And the only way they're going to be able to loan you money from their retirement account is if they have transferred their current retirement funds or a portion of them over to a self-directed IRA company. And then they can truly, self-direct it, but they can move that money over tax-free, penalty-free. So Christine, you may have a self-directed IRA company that you recommend to people.
Actually, I've interviewed a couple of people who have those companies, and I'll put links to them in the show notes. Thank you for reminding me.
Very good. Well, that's an actionable item right there for everybody, and that is, unless you establish a relationship with a self-directed IRA company, then when you're talking to a new potential private lender that has retirement funds, I mean, they've never heard of it. I mean, all 40 some of our private lenders had never heard of private money until I told them about it.
Yeah.
They had never heard of self-directed IRAs. And again, over half of our lenders are using their retirement funds. So it's really important to have that relationship in place. So I teach new potential private lenders what private money is and how they can do it. And then I also coach and train real estate investors on how to get private money lined up for themselves. So with the private lenders, that it's brand new to them, I've got a very simple, easy to understand PowerPoint presentation, simply called the private money presentation or private lender presentation. And this presentation only takes about 20 minutes to go through it. It teaches what private money is. It teaches my private lending program, the interest rate that we pay, how the private lenders are protected, and et cetera. And so by the end of the presentation, then, I don't even have to ask anybody for money. If they've got investment capital or retirement funds, now they're wanting to know more. And, I've had conversations, and my students have conversations just one-on-one with people. But in order to automate the process, I wrote the script and recorded an audio some years ago, and I've actually customized this audio for over 1,000 real estate investors over time. But I call it stress-free investing. And so I say, let the tools do the work. So this 16-minute audio does not, what I call, spill the beans on your actual private lending program. That happens when you're, showing the PowerPoint. But it introduces this idea of private money and what private lending is. And so we have it on, and so we customize that for the real estate investor. And so we still have CDs, but we also convert that to an MP3 so that can be emailed out to their list. We also connect it to a YouTube link to where it can be texted to people, posted on Facebook or whatever. So that 60-minute audio just really gets people interested in learning what the actual private lending program is. So we have a process of teaching the private lenders. I teach other real estate investors all the time how to have successful private lender luncheons or private lender events. Mm-hmm. And so, my students and myself will have 25 or so people, come to an event or a luncheon to where we feed them, right? And, it takes the same amount of time to teach 25 people what private money is as it does one person.
Right.
So we have multiple ways of what we call getting the word out to potential private lenders. And then as far as teaching other real estate investors how to do this, I do that on multiple levels. I have a new money guide that I just wrote that will get new real estate investors or seasoned real estate investors on the fast track to learning about private money. And if they get the money guide, that will lead them right to the book. So I published a book less than a year ago that's really gotten a lot of traction called Where to Get the Money Now. And then I have a monthly membership where we've got about 300 people in the membership, and I go live twice on Zoom a month, talking with them about private money. And then I have a live event, just did the most recent one 2 weeks ago, called the Private Money Academy Conference that we have right here in our hometown. And at these events, we'll have 100 people from all over the nation. So, multiple ways that we educate, train, and coach real estate investors.
Nice. Excellent. Yeah, I just want to quickly go back to something that you've said, you've touched on a couple of times, and I want to make sure people understand it, which is the idea that you don't recommend, because even my cousin took some kind of a program and she was saying, yeah, I just got to find the deal and then the money, and then, the money. No, I agree with what you said. When you have a property under contract and you don't have any idea where the money's coming from, that you're in the absolute wrong mindset at that point, right? You're like, shit, I'm going to lose my deposit. Oh my God, I got to go find somebody, right? Line up the money, get some people interested, and then go out and find your deal, because then it's relaxed, right? Then you're just like, yeah.
Yeah, it's like, and just think how much more confident and how many more offers a real estate investor will put if they got, $500,000 burning a hole in their pocket, waiting to be, put to work. Right. And I mean, there's so many reasons, Christine, why I just love private money. The bottom line reason is that it just puts you in control of your business. It's not the bank or the mortgage company telling you what they will do. I mean, my land's your banker will give you an umbrella when the sun is shining, right?
Right.
So they're not telling you. So when I was borrowing money from the banks, of course, the bank made all the rules, right? In this world, we get to make the rules. We set the term, the length of the note. We set the interest rate that we're going to pay. Now, quite frankly, as far as frequency of payments, I really leave that up to the private lender, because different private lenders have different objectives. We've got some elderly private lenders that actually need the income. They don't want to use any of their principal investment, right? But they want to get high rates of return safely and securely. So if they need the monthly income, then we do that. But remember, since I'm always borrowing more than I need to do the deal, the initial monthly payments is cash flowed actually by them.
Right. You're paying them back their own money.
Right. When they funded the deal. But now, of course, I want to get that property either cash flowing or rehabbed and sold as quickly as possible, because, that initial cash influx will, go away. Another reason I love private money is there's no limit to the number of lenders or the limit to the number of money I can borrow. The local bank and the mortgage companies, they got a limit to the number of deals or the amount of money you can be using anytime. Yeah. You can, in this world of private money, you can have as many private lenders as you want across state lines. There's no regulation of borrowing across state lines. Yeah. And that's because we're not being regulated by the Commissioner of Banks like an institutional lender is. Another big reason I love private money is because I can close quickly. I can close deals in 7 days, 7 days. And I tell you, Christine, with you being in the industry that you've been in, I'm surprised anything ever closes. Like traditionally, like how many times have I got to send you my W-2 or my whatever? What did you do with the first 3?
And then the day before closing, oh, the underwriter needs such and such. Like, really, this is the first time the underwriter has laid eyes on this thing. We've been in under contract for 45 days. And now I'm hearing from the underwriter, they need something that I could have given them a month ago. My closing is going to be delayed, right?
Yeah. So just so much more control. You know, as I said, you can close fast. Your credit score has got nothing, absolutely nothing to do with how much private money you can get.
Right.
I mean, the private lender I've never had a private lender say, okay, I want to look at your credit score. No, the reason they're willing to do the deal is because high rates of return safely and securely, and there's no volatility in their investment or their principal loan amount. I'm contrasting to the stock market. Like, you know, if you invest in the stock market, I mean, there's, you know, your investment can be, or the private lender's money can be worth less tomorrow, and because stocks are volatile.
Right.
Well, that's another part of the program our private lenders absolutely love, is there's no volatility. Their principal loan amount remains the same until we sell the property. Then they get all their principal money back, along with any unpaid accrued interest. And of course, they want to do another deal just as soon as possible.
Right. Exactly. So what's your your goal for turning around a property from the time that you first lay eyes on it till the time that you've got it under contract to sell or have sold it?
Yeah. Well, it depends on the extent of the rehab.
Yeah.
Like, you know, if I've got a rehab that's only, you know, $20,000 or $25,000, then that should be done like within a month, within 4 weeks, from the time we start. Now, you see, we'll have multiple projects going on. I may have a house that's sitting there 3 months before any of my general contractors or crews can get to it. So it also depends on how backed up that we are. But I didn't, like, you know, we're finishing a rehab right now. And just the rehab was $110,000. Well, that's out of the ordinary for the typical rehab that we do. Most of our rehabs are between $25,000 and $40,000 is typically most of what we got. So on a typical rehab, from the time we start to finish, I want to be done. I want the rehab process not to take more than 3 months, hopefully closer to 2 months. So from the time of purchase until cash out, on average, is probably, including the time that we have to wait to start on a house, is typically going to be 6 months to 9 months. Mm-hmm. But now, of course, in this market, as you very well know, you put the house on the market and you got multiple offers in less than 24 hours.
Right.
Well, particularly if it's rehabbed and absolutely beautiful.
Mm-hmm. Yeah, exactly. Exactly. That's a huge advantage. And on the buying side, having the cash is a huge advantage, allowing you to get the best price and be competitive when you're, you know, going against other buyers.
Yeah. And, you know, I experience it all the time. And I tell my coaching students as well, a seller of a property has got no idea really what's the least they'll take until they get the offer.
Right.
I mean, we hear it all the time. Like, my acquisitionist, Kim, she'll send me information in our CRM on a particular property, and they say they're not taking a penny less than $125,000. Well, a house I just closed on last week, we offered $80,000 and they took it. So we're talking $45,000 less than they said was the least that they would take.
Yeah.
So my advice is, if you want a property, make the offer. Because you know what, Christine? I never bought a house that I didn't make an offer on.
That's for sure. That's right. You got to start. You got to take that first step. Absolutely. So Jay, you've been such a wealth of knowledge. I've really loved talking with you. Tell me how people can get in touch with you and get that great guide that you just created.
Absolutely. So yeah, I just finished writing this new guide. It's called The 7 Reasons Why Private Money Will Skyrocket Your Real Estate Business and Help You Build Incredible Wealth. It's free. You can download it right now. And you can get it at www.jayconner, Jayconner, not OR, I'm an ER, jayconner.com/money guide. jayconner.com/money guide.
Okay, great. We'll definitely put a link to that in the show notes as well. And
Absolutely.
you've written a book as well, which we want to put. What'd you say? Sorry.
I just said I appreciate you giving me the opportunity to share this money guide with your audience.
No, I think believe me, the pleasure is all theirs. All
Yeah, well,
ours.
and this guide, I mean, along with giving the 7 reasons why you want private money and need private money, it'll actually get everybody started on the fast track on exactly step by step how to get the private money. How does you approach private lenders? How do you make your list? Who do you contact? And the guide to get you started in all that.
Well, that's an excellent point because it might not be who you expect, right? You might think, oh, I've got to go to the person on the hill with the gigantic mansion and that's where I'm going to get my money. But you're getting it. And you're talking about retirees, just your regular citizens who just have this money that's doing nothing for them. It might even be eroding value and they're dying for a way to get a positive, dependable cash flow from it.
Yeah. All of our private lenders are average, everyday people.
Excellent. Jay, thank you so much for sharing all your wisdom with us today. And
Absolutely. Thank you, Christine, for inviting me to come along. And I've really enjoyed it. And I'm also looking forward to your audience getting the money guide and getting started on getting private money. Thank you so much.
Yes, absolutely. Definitely. You have to download that. Like I said, I'll put that in the show notes as well as the link to your website so people can also get, look if they were interested in your book, which looks like a fantastic read. And thank you, listeners, for listening. I know you have a choice of about 2 million podcasts to listen to. And I'm really grateful that you're here listening to and sharing this time with Jay and I today. Remember to share this podcast with a friend who would like to get into real estate investing. Maybe you guys can do it together. And be sure to be here next week.